Although the conversation has been more about the BDCs and banks, where there were other issues, and we have Tim Moshi, an investment strategist, strategy analyst with AfroInvest Asset Management, to weigh in on the topic. It's great to have you this morning. Good morning.
Thank you.
Good morning.
Thank you.
Yes, it was quite a dramatic ending to the meeting yesterday, but we have the consistent CRL debit by the CBN and a whole decision, by the MPC. Do you think financial deepening will improve with this decision?
Well, to start with, I think financial deepening has to do with how the financial sector is able to affect the risk sectors of the economy. That is, how they are able to provide finances in addition to financial inclusion, because everything has to be on the back of financial inclusion. So really with the policy, when we talk about financial inclusion, it has to do with how banks and financial system generally is able to, affect the private sector, the risk sectors of the economy. So do we think this will really affect the risk sector? Do we think that there's an incentive for the banks to lend more? One thing we know over time is that, banks are sensitive to even just a signal of increase in rate than a major reduction. Right. So even a neutral position will not even move a needle.
Because the governor also spoke about, advising the banks to actually lend more credit. Advance more credits to individuals, and it's at this point. So is this possible?
The point is, why are banks not even lending as well? Though we observed that over in the last few months, about 4 or 5 months, credit to private sector has actually improved. But when you look at the components, the credit is actually not to the sectors of the economy that you think are labor elastic. For instance, about 25% of even credit to private sector is to the oil sector. And this same position was what we had in 2016, 25%. Nothing has changed. That was what led to the increase in NPL and a lot of challenges in the sector. So the problem is that if we want banks to lend to the private sector, then we have to de-risk the economy. Because, banks...
How do we do that?
So if you're talking about de-risking the economy, then we have to look at the structural problem we're talking about every day. You won't want to invest in agriculture and get to know that the farmer is sent out of the farm and maybe due to a farmer either problem, and you won't even want to get to know that you have actually lent to someone and the person is currently grappling with exchange rate challenges because the person converted the naira you gave him at maybe at 400 and you're talking about 505 now. So automatically that player, that firm has lost without even doing anything because of exchange differential.
How do you relate this? Yesterday we had a conversation on investment, and we saw that domestic investment is actually going up, and manufacturing is being favored. Fine, you might, like you mentioned, there are insecurity issues, there are clashes, that have discouraged investment in some of these areas, but maybe people are looking beyond that and still going ahead, to take these risks.
Well, it's quite funny that if you look at, let me give you a very good instance. If you look at the components of foreign trade statistics, I observe that, it's possible you just advance loans and credit to manufacturers and they even use it to import. So, and the most important thing, what we're talking about in terms of Nigeria economy is value-added production. That is kind of production that will enhance labor market, reduce unemployment, because, we talk about backlogs and issues around their papa and all of that. So they would rather get those funds and probably import this thing so they wouldn't have to grapple with issues around the value chain of their, manufacturing processes. So it's possible you advance so much to the manufacturing sector, but the economy is not optimizing it because it does not pass through the value chain. Nigerians are not employed because you've imported as an alternative.
All right. So another issue that came up from the MPC was the issue of money supply. Broad money supply increased marginally in June to 34 trillion naira from the preceding. What implication does this have on the economy?
Well, economic balance or the general economic theory is that when you have so much money, engaged field goals, you're talking about inflation. Right. For instance, if you look at even taking it away from the broad money supply, because broad money supply has so many things inside of it. You have is the addition of currency outside the bank, plus demand deposit, time deposit, and maybe all these T-bills. But what affects an average man on the street is currency outside the bank. That's what measures the purchasing power. So currently, currency outside the bank even went up by about 20%. But for instance, look at nominal GDP just grew by 12%. 12%, you know, which means, and GDP is just about the actual output, the economy activities, you know, that has been experienced over that certain period. But so meaning you have 12% in terms of GDP, 20% currency outside the bank. That is actually fueling inflation.
Well, how do you see this, you know, going forward? Do you see the money supply still going up? Well, we still have, you know, debt servicing and all of that, and obviously there's also this money printing issue there. So, what do you think?
I think this CBN is trying to ensure that, you know, the level of liquidity in the system is properly managed, and for the fact that you see that each time a bond or TBs, all these financial instruments are maturing, they quickly issue another one, so as to ensure that, you know, we don't have so much money chasing few goods. And if you say few goods, you know, it's quite funny that the few goods we're even talking about now is forest. It's now the new good, like the gold. Right. So beyond saying that you are taking away money for people from people, so as not to put pressure on maybe say Gary, all of those. These are not the problem. It's even the goods we are looking at is we don't want so much money against the US dollar. Right. We don't want people to even have so much to speculate against US dollar, because we know that even in the market, apart from people that actually need dollar for real imports, for import that to facilitate the real sector, a lot of people demand it for speculation. And you know, speculation angle will not actually help the Naira. So that's why the CBN will continue going forward. The CBN will continue to find a way to reduce the...
So do you think that this clamp down on BDCs and that it will have a kind of,
would this have,
you know, correction effect?
Well, it's quite interesting this is happening. Well, to the BDC, I would just say, well, tell them not to be angry with the CBN governor or something, to just because. But the truth is this: if you observe over time, I did personal research, and I observed that periods of low divergence between official rates and the parallel market rates, you will see significant inflow in terms of FPI. That is, so when official exchange rate and the parallel market are very close, you will see inflows in terms of improvement in capital importation. So if going by that is actually commendable that the CBN is taking the decision at this particular time to actually bring all the market together. You know, the CBN is trying to unify the exchanges so as to encourage foreign investors. Even in a general economy, it's not advisable when you create a kind of what we call segmented markets. When you just segment your market, you are selling the same product, because there's no value. What's the difference between a Naira at 500 Naira and another one at 400? We're just creating a kind of arbitrage and distorting the economy.
But can the banks handle the demand? I mean, a lot of people already have issues with getting this forex
foreign
from the
currency,
banks.
yeah.
You know, people just run back to the black markets as
a backup. Really.
Yeah, so now that you don't have that, or that is more difficult to access, then can the banks handle it?
So,
or do we trust the bank to handle it transparently? That's another issue.
That's where the CBN comes in, actually. The CBN is the regulatory authority that has to provide the groundwork for this thing to actually thrive. If the CBN, for instance, jokingly, if the CBN wants another 20 banks or 30 banks in Nigeria today, will get it. What I'm saying in essence is that the CBN should just push the bank. The authority has absolute control over banks. Should push the bank to ensure that they comply with other measures that will enhance these whole processes. And in terms of communication as well, I'm sure the CBN will be working on how to ensure that they continue to communicate so that people will not get the wrong signal, because signal is also very important. I think they can. It's all about commercial bank increasing their capacity and even have the good, having the interest of the FS market at heart.
All right, let's go back to 2016. The same period, the central bank actually banned the BDC operators at that time. And what happened is the Naira depreciated about 50%. So, you know, now this has happened again. We have Naira at about 500 Naira to a dollar. What's going to happen?
Well, this period is quite different from 2016, a little, because you observe that when the CBN took the decision in 2016, it was in January, and at that period, you observe that there was deceleration in FX reserves, and oil prices were not even recovering. like oil prices were still down, like it was heading downward. But this time it's quite different because you know what has happened to oil price in the last few months. Even compared to last year, we've recorded over 30% increase in oil prices from as low as $20 or $15 per barrel last year. And if you look at what has even happened to foreign reserve in the last few days, that's also tick upward. So it's possible that the CBN even understood all these things. They are so strategic to actually make the decision at this time, so as not to to deviate a bit away from what happened last year when there were so many negative sentiment in the market. But now the sentiment is changing a little on the back of oil prices, where a lot of investors will start saying will believe that Nigeria fiscal stance will consolidate, and oil prices as well. So all of those factors together, I think it's a very good time. Okay. And you will look at, even if you look at it even on a broader scale, you will observe that a lot of international agencies that want to give Nigeria greenbacks, that want to actually get us some money, right, they always base it off the unification of the currency. We need all those people than just FPIs.
And we still have that dollarization concern,
Okay, but let's not dwell on.
Let's not dwell on that. Okay.
We have other issues, that were considered. For instance, the CBN did mention that 98.14 billion naira has been disbursed to healthcare intervention, and 120.29 billion naira given to 11 discos for infrastructure development. These are major issues that affect the outputs of the economy, and these are impressive figures that we see. But are they having the expected impact?
Well, I think the impact is, there's always a lag between when a policy is put in place and when you begin to see the impact. But I think it's a very good step, is the right step, actually, because let's look at it from the health sector. You know that Nigeria has, in terms of, let's even go by the life expectancy rate, Nigeria is just about 58 years compared to South Africa, 64, India, 69. And if you look at what is happening, even in the health sector, you see exodus of medical doctors because they don't find the climb maybe attractive enough. So I think it's a good step. And I think it will actually enhance or at least pretend that something is actually happening in the health sector and to the energy sector or the electricity and all. I think discos particularly, I think the issue has always been around affordability and poor metering as well. So I think if this fund is properly channeled to, ensuring that people have meters and all, I think it's quite good because we are still grappling with having over 45% of Nigeria out of, they are not connected to the to electricity. They don't have access to electricity. And there are a lot of people are yet to be metered. So all of these factors, and no economy can actually thrive if, for instance, there's no power supply, you don't have power supply, and again, human capital development. The level of development you see across most advanced economy is a function of their human capital development. And two factors are important: human capital development, health, and education. If you are not healthy, you can't be productive. If you are not healthy, you cannot be innovative. Right. So I think it's quite good.
Yeah, well, at least we also have a supplementary budget that was just signed 2 days ago. Yeah. It also has a health component there to do with COVID-19. And
security matters too.
We'll certainly be looking forward to the impact of this in the health sector, especially as the country or the world still deals with COVID-19. Yeah. Well, we wanted to thank you so much for being a part of the show, Mr. Temi Tope Omoshiri, Investment Strategy Analyst with AfroInvest Asset Management.
Thank you so much
for sharing your thoughts with us this morning.
Thank you.
And enjoy the rest of your day. Yeah. We'll just take a break now. After that, we have Apex Commodities Market. Do stay with us. It's Business Morning on Channels Television.